We are sending it over to Joe Tegay for the Trader Rundown. Joe, good to have you here. What do you think about the selling in the stock market this week?
Thank you, Angie. And Wednesday, we saw a big correction for the market. We saw all the major indices down in unison. That, of course, is a high correlation. High correlations, what does that mean? Yes, that's high volatility. We saw the VIX spiking up big. We had a big increase in the VIX, a big risk-off day. People worried again about the coronavirus coming back. It's up in California, Texas, Arizona, Florida. Specifically, people are worried about those big states, worried about those economies slowing down, people making different choices, going out less. Maybe even worse would be a statewide shutdown having to go in place because the cases are going out of control and the hospitals are being overwhelmed. Now, the school has been this whole time, should the economy slow down, should COVID come back in a second wave, that the federal government will be there with more stimulus coming on board. And that's why the market's been tolerating some of these events up until now. So now that it's happening, we'll see what happens if that does happen, if the market responds favorably. We'll be watching all this as we go. Of course, the market is on an edge. And don't forget, the VIX has been above 30 this whole time. So the VIX has been telling us days like this will happen. The VIX has been telling us the risk of a day like that will happen again and again. And we're not going to be out of the woods until the VIX gets down low. Now, of course, we got a long ways to go before that. However, as long as the market's above the 50 and 200-day moving averages, I think there might be some possibilities for this to happen in the future. I'm watching 3013 in the S&P 500, 2963. That's the 200-day and 50-day moving averages, respectively. Above there, I think the market is it has some green shoots. Below there, of course, I'd be watching out to the downside because we've seen how quickly things can de-escalate.
Normally, the stock market action would start to taper off around now with a big holiday week ahead for the 4th, but that's not happening. What are you seeing?
Usually, as we get to this time of the month in June, you start to come along the dog days of summer, usually heading into the 4th of July weekend and into August. You see people taking vacations. You see less trading activity. This time around, because people might not be interested in going traveling, getting on a plane, staying in a hotel, maybe people will still be staying home, or maybe participants will still be in the market. Maybe there will be less of those dog days of summer and more just activity. I think that's another fascinating effect we're seeing with COVID. So the market's pricing that all in place, and usually you'll see a lower volatility, a lower VIX in the dog days of summer. But because people are not going on vacation, maybe we won't see that this year, and it'll be fun to watch it all take place. And of course, as long as the VIX is elevated, we're going to see these big moves. For Equity Armor Investments, I'm Joe Tegay.
For more Business First AM, check us out on social media. We're on Facebook, YouTube, and Twitter. And go to businessfirstam.com for where to see our show on TV.